Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment for Wednesday, September 7th. The dollar is generally higher at midday in Europe compared with its opening levels. It seems to me to be just some mean reversion after the sharp fall yesterday. The only exception is the New Zealand dollar, which added on to its gains after the second quarter manufacturing sales volumes rose sharply. As for the rest of the day, the focus will be on the Bank of Canada meeting. All the economists polled by Bloomberg expect no change in rates. And why should they change? On current trajectory, the Canadian economy looks likely to meet the forecast that the bank made when they last met in July. As the graph shows, investors have recently shortened the time until they expect the Bank of Canada to start raising rates, probably because of the relatively solid performance of the Canadian economy recently. The main question then will probably be how the bank sees the balance of risks. Last time they summed up by saying, quote, overall, the risks to the profile for inflation are roughly balanced, although the implications of the Brexit vote are highly uncertain, unquote. So, now that the Brexit vote is over with no harm done, apparently, they may see less risk of a downturn and could be slightly more upbeat and more optimistic, which could be positive for the Canadian dollar. The monthly U.S. job openings and labor turnover survey, the JOLTS report, isn't a big market mover, but ahead of the September FOMC meeting, investors will want to see every detail of the labor market picture, especially after yesterday's decline in the labor market conditions index. The number of job openings is expected to remain unchanged at a relatively high level, which could be bullish for the dollar. Overnight, Japan will release its current account balance for July. The surplus is expected to rise on a not seasonally adjusted basis, but to fall on a seasonally adjusted basis. For some reason that I can't understand, the market still looks at the not seasonally adjusted figure. So it could cause the yen to strengthen. Finally, China is scheduled to release its August trade data. The country's trade surplus is expected to rise as imports continue to fall faster than exports. This may dent sentiment towards the Australian dollar, depending, of course, on how the Australian trade data, which also comes out Thursday morning Asian time, performs. On the other hand, the pace of decline in imports in China is forecast to slow considerably, and that could be considered good news for commodity exporting countries. So it's not clear to me how the Chinese trade data will affect the Australian dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.